I'm very happy to have with us Evan Davis, who's the economics editor of BBC News, which means he's pretty much the chief don, I'd say, of BBC News in terms of economics news. All of it all the news goes through him. Yeah, and we didn't pay a huge amount of fee because he's only an economics journalist rather than a newsreader. Yeah. He's also a presenter of a business reality program called Dragon's Den, and also in his spare time has authored two books called two dictionaries, I might add. So if any economic terms you're not clear of, I'm sure he's going to be able to clear them up for us. So ladies and gentlemen, without taking further amount of your time, please put your hands together to thank and welcome Evan Davis.
Thank you, everybody, and thank you, Shano. I'm incredibly happy to be here, and I'm happy for three reasons. One is that it's actually a very well-organised event, and I get involved in the odd event, and normally they pile on emails and all their anxieties and stresses about their event are sort of passed on to the person who they drag in to be chairperson, and Shahana has done none of that. It's been most meticulously organised. I'm also happy because one of the things that happens if you're economics editor of the BBC is that the population at large think you're someone to whom they can write their general complaints about capitalism and their ideas for alternative structures. So I would say about 5 to 10% of the letters I get are essentially redesigns of capitalism and what's wrong with it and how it could be reinvented along the lines of the author's note. Often these are quite long letters, often they're books, often they're in green ink. And by and large, some of them are mad, some of them are bad, and a lot of them I don't have time to read. But I'm always genuinely interested in big visionary critiques of the system on which I end up reporting so monotonously so often. And I really am interested to hear actually what we're going to hear tonight, the critique, if you like, or a critique of a lot of what I end up reporting on. I'm also thirdly glad to be here because I actually find I have a confession, not to be taken outside these walls, I have very little understanding of monetary economics, even though I did a paper at Oxford called Monetary Economics. And it's all gone, I don't remember it, and our two speakers both do understand it, and understand it very well. So I might actually learn something. Before we get going, just actually how many of you would you say, work in banking, finance, or the city in some form or another? How many of you are basically finance people? Okay, most of you. How many of you work in something that would be recognisably Islamic finance of one kind or another? So a relatively small number. So the average person in this audience is basically someone working in a non-Islamic bank, basically. Okay, good. The format for tonight is fairly straightforward. We're going to have 15 minutes from Tarek, then 15 minutes from Lord Brian Griffiths, and then we're going to open it up to questions, in which questions or comments, preferably not speeches, but mini little speeches, so we'll have a fairly open discussion. Basically, we'll keep it fairly informal, and we will absolutely wind up before 10:30. Let me, for those who don't, before 8:30. I'm sorry. Before 8:30. I'm fixed on this at 10 o'clock, news at 10 mindset, so I get very much. Let me, for those of you who do not know them, introduce our two speakers. Our second speaker, because I'm doing them in reverse order, is Lord Griffiths, Brian Griffiths. Famous, really, in a number of circles for being head of Margaret Thatcher's policy unit in the 1980s, involved in privatisation and deregulation in that era. Today, famous for being the vice chairman of Goldman Sachs. Has written extensively on business ethics and the like, very much from a Christian perspective. In fact, I think is chairman of the Archbishop of Canterbury's Lambeth Trust, and has been involved in the church in other ways too. And also more recently when the Shadow Chancellor set up a committee to look at a commission, if you like, to look at personal debt. I think you were the chairman of that commission, is that right? Yeah. Is it still going, that commission?
No, we reported. The report is here.
Oh, excellent.
The report can't be to be advertised.
Okay, we've got a lot of people selling books and these nights. Which brings me to our first speaker, Tariq El-Douani. I don't know if any of you have seen it, but he is basically the author of The Problem with Interest, which is a well-written, cogent book outlining the, if you like, the critique of interest-based financial capitalism. £10. Tariq is also the founder of IslamicFinance.com, where you will find a number of articles. You'll find bits of the book, and you'll find some surprising and witty pastiches as well. But what's good about him is he came from a financial background, so he knows what he's talking about. He was an interest rate derivative dealer here in the city, and then became head of Islamic finance for a city institution. So what I'm going to suggest is we have 15 minutes from each of them, and then we'll have questions. Thank you.
Assalamu alaikum, good evening. Thank you, Evan, for that introduction. And thank you, Brian, for your publications that you've sent. I can call you Brian, can't I?
Please, of course.
For the publications that you sent to me, which I've read over the last 2 or 3 weeks. And it's quite clear that we share many similar sentiments. You want to see a reduction in poverty, you want to see increased financial stability, less wealth inequality, ways of protecting the environment, and I share all of the sentiments. Of course, the question is, how do we achieve them? And I think you as a Christian and I as a Muslim should also share some of the methodology at least, which is that the God who created us knows how we work better than we know ourselves. And so it's for him to set the law for us. And if a man wishes to put his own law in place of God's law, then the results will be worse than they otherwise would be. And I think that's a common theme through Judaism, Christianity, and also in Islam. I'm going to get my watch, okay, because 15 minutes isn't long to put the case for the prosecution, so it's been programmed for 14 now. And I think that, just to make a couple of points, that in Islam, the law of economics, the civil law, muamalat as we call it, is prohibitions-based. So it doesn't tell you what you should do, it tells you what you shouldn't do. It's not for me to come to you and prove that a derivative or a bond or a futures market is permissible. It's for you to come to me and show me that it's prohibited. And if you can do that, I have to give it up. But this is very important for us as Muslims because it means that when we address the economic sphere, it's not for us to come and say, look, here's this wonderful system that works and all the bells and whistles are clean and smoothly operating. It's for us to say, don't do this, don't do that. Take away the bad things and then everything will be okay. That's the kind of methodology for us. And I think that when we look in the world today and we see in the economic sphere what's happening, that one of the major problems is that we have actually overridden one of the main prohibitions that God has sent us in economics, and that is the prohibition on usury. Now, there are differences in the interpretation of what usury actually means, certainly between Christianity and Islam. This thing called interest it came along after 1,000 years of Christianity, and it means something different to what it means in Islam. In Islam, any benefit that you receive on giving a loan is prohibited, any material benefit. You get rewarded in the afterlife for giving a loan. That's the basic idea. And I think people are coming to realise now I think we should go to the we're at the wrong place on this actually. Perhaps if I can. Yeah, someone needs to.
Don't worry, Charlie, I won't count this as public.
We have a problem because today we have a situation where, for example, the United Nations Development Programme many years ago came out with some research. Thank you very much. It's easy when you know how. That shows the scale of interest-bearing debt and the effects it has upon humanity. This is a 9/11 happening every few hours, actually. And thank God that journalists are now, several years later, beginning to understand that this is a real kind of weapon of economic terrorism. The debt was supposed to help countries develop. It was supposed to help them invest in their infrastructure, their business, generate profits and repay. But what actually happened over time is that the debts just kept on growing from one decade to the next. Now we're over $2 trillion in debt in the developing countries. And I think that one of the reasons that we have this aid culture now is because the scale of the debt became so massive and there were so many failures over time in the model as it was supposed to work vis-a-vis how it did work, that one of the few things we could think of in the West was to give aid. And I'm all in favour of giving aid. I think these are large sums to give to any country. The problem, of course, is that we take back much more than we give. And in a sense, aid has just become a kind of public relations exercise to keep the people happy, to make them think that something is being done. And I think that if we look wider afield, not just in the developing countries on their own, but as Brian says in his Commission on Personal Debt, the report, which is full of fascinating information, you will see that the ratio of indebtedness to income, even here in the UK, and it's common across most of the developed countries, the ratio has substantially increased over recent decades. So despite all of the hard work that we're doing, we are more in debt today than we ever have been. And the central question for me tonight, the one that I want to discuss, is where is all of the debt coming from? This is a major question, because if we can find out where the debt is coming from, then we will have a solution, if we want one. And in order to know that solution, if you like, you have to go back a little bit in history. And I like to look at the history of banking as it developed here in London over 300 years ago. And the state of play then was that we had the early bankers who were goldsmiths. Typically they would take deposits of gold coins from merchants and they'd give them a paper receipt saying, here you are, I promise to pay you on demand the sum of X pounds, however much had been deposited. And over time what happened is that the early goldsmiths started to issue receipts made payable to bearer, so that anybody bearing the receipt to the bank could come and get the underlying gold coins back. And this was a very important development, because what it meant for merchants in the City of London and further afield as the notes spread, was that they could pay for each other's purchases with the paper. They didn't need to go down to Joe Smith, the goldsmith, get the gold coins, pay them to the shopkeeper, and the shopkeeper goes back to the goldsmith and deposits them and gets another piece of paper. It didn't have to work like that. The buyer simply gave the seller a piece of paper and said, you go down to the goldsmith and get the underlying gold coins. The reason that this was a critical development was that the receipts turned from being a receipt for money in the goldsmith into being money themselves. And that was a major development in the history of money in this country. Because then the goldsmiths turned to society and they said to people, hey guys, we're no longer just safekeepers of money for you, we are lenders of money. And when the people came to the goldsmith, what the goldsmith lent was not a gold coin, but a paper receipt, which he just printed in the back of his office at no cost. This was a phenomenally profitable business because the goldsmith could charge interest on his paper receipts. And indeed, this is why one of the first directors of the bank said this. It's a fairly clear statement of what banks do. I couldn't summarise it better myself. Now today we have a system which is based on the creation of money by banks. And I think that perhaps the easiest way to show that is to make a distinction between the money that the state produces and the money that the banks produce, the gold coins and the bank money that is produced. And if I can draw that distinction and carry it forward to the new method of money creation, which came in around the middle of the 19th century, we have a situation where state money would be used to set up a bank. Let's imagine there's one bank in the economy. It puts in, or the directors put in £10 of equity and they have £10 of cash on the debit side of the balance sheet. Now 2 people come along, they open up an account, they give them a checkbook, and they go off and they meet one another, and person A buys a watch for £100 from person B. Person B takes the cheque, gives the watch, the goods have been paid for, he goes to the bank, deposits the cheque in the bank, and the banker debits person A, credits person B. Simple accounting procedure. Person A is now in debt by £100, and £100 of money has appeared out of nothing in person B's account. No state money exchanged hands when that watch was sold, but suddenly there's £100 in the economy, and notice there's £100 of debt. Debt and money supply are the counterbalance on the economic balance sheet. If the transaction is reversed and B issues a cheque, buying something from A, the transaction reverses, money is destroyed. Repayment of debt leads to destruction of money, leads to economic contraction. So we must have the debt, and because debt grows at interest, the debt must grow from one period to the next. So today we measure money supply by looking at state money plus bank money. This is an actual example of UK money supply. The brown bit is what the government created, the state money. The grey bit is what the banks have created, according to the IMF measurement here. And so you can see that the banking system is charging society interest every year on the grey bit, and it's by far the bigger producer of money supply today. We don't need to do it that way. In the 1860s in America, Abraham Lincoln realised that if he was going to fund the Civil War, he needed to borrow money. And he wanted to borrow $400 million. He went to New York, the bankers offered it to him at between 26 and 32%, depending on who you believe, and he went back to Washington thinking, I'm not paying that. And then he realised that if he borrowed the money from the banks, they'd just print the paper out of nothing. So he said, well, why can't I do that? And he did. He did it with Secretary Chase. They printed $400 million of money, treasury note money, using green ink, so they became called greenbacks. And he funded the Civil War. And New York was furious with him, of course, because it uncovered their ruse. Then, in the First World War, the British Treasury did the same. They wanted to finance the war. Instead of going to the Bank of England to borrow money, they printed their own Treasury notes. Notice this is issued by Lords Commissioners of His Majesty under the authority of Parliament. Yeah? These notes are legal tender. Okay? Issued by Her Majesty's Treasury. It's state money, not money borrowed from the bank. And because we don't have that system today, because we have a system where money is borrowed from the banking system at interest, banking does become very profitable. Here is the Fortune survey for 2001, 500 top companies in the world divided by country and by business sector. I took all the banks and all the non-banks, and I saw how much profit they were making. In the UK, the banking sector made $20 billion equivalent during that year. Now think to yourselves how much the rest of the economy made on this list. All the non-banks, the retailers, the builders, etc. Have a think, and that is what they actually made. They lost $1 billion in the United Kingdom that year, and the banks were making $20 billion. So this is an extreme year. We have to be careful. Statistics can tell all kinds of lies, but there is definitely a bias towards banking profitability in the economy. And it's not surprising when you have a look to see the extent of money creation that we've seen before. The result, pumping money into circulation, asset prices tend to rise. And this is what has happened in the housing market here. The banks pump money into the housing market, people get into debt, but they have the money to buy houses, prices go up. I have a relative who saved for many years, and she saved £50,000. She wanted to buy a house in Leicester, it was a few years ago. She procrastinated for a year. During that year, prices went up 50% to $75,000. A year later, they were $100,000 for the kind of house she wanted to buy. Her stored value was halved by the emission of bank money supply into the economy. It's as if the banks had robbed her without ever going to her house. This is a critical issue that we have to come face to face with, because we are seeing the statistics here. We're running into another housing contraction probably in the next 2 or 3 years. There will be more repossessions, just like we had 15 years ago. What is the solution? The solution is to have a look and see what the problem is, as I say. Society has accepted this. 2 minutes, Evan? 2 minutes? Fine. Society has accepted this because some large corporations have found a way to make profit out of the deal. They're not banks, they don't create money, but they do something else, and what they do is called leverage. They borrow $100, they invest it at 20% return on assets, they pay 5% to the bank, they get 15% off the top. They're skimming. So if this is your business model, you don't borrow $100, you borrow 100 million. You invest 100 million, make 15, give 5 to the bank. Yeah? The moral of modern business becomes grow big. Quality is not so much emphasized, it's bigness which is emphasized because this is leverage. And that's why you can go down the high street today and you can see all these places to buy a mobile phone. And of course it's healthy competition. I think you probably know what's coming. They're all the same. They're all the same company. Yeah? It's all part of Dixon's. This is leverage. And if you look at groceries, at the Tesco, Sainsbury, Asda, a few big chains dominating the market, kicking the little guy out of business. And the high street changes its character. And you have a look at the nature of the high street now, what people are building, the same there. This is my village. And it's beautiful. It's built over several hundred years. I think it's beautiful anyway. Every house is built by a different architect, and a building company for individuals to live there. Yeah? And tourists come and see this. It's great stuff. But in the same village, what we build now is that. And that, for me, is a disaster zone. It's one big company, one architect, one builder, all the houses look the same, take a green hill, plaster 600 houses on it. The directors of the company, I believe, who built that, wouldn't really want it on their doorstep. It's not the sort of thing, just look again, there's variety, the small businessman, there's an absence of leverage. Here is leverage working for you, Wimpy's, Barrett's, building tons of houses. Yeah. Rather than good quality houses, rather than an organic tree, you get this kind of splodge. And for me, this is a sign of an interest-based monetary system at work. You won't get tourists coming to look at this in years to come. Finally, I just want to show the project finances among you what happens when you use interest as a decision-making tool. I've done this. This is reality. This isn't just a theory or an idea. We have this discounted cash flow analysis technique that we use in business. We present value all the cash flows and see which project we're going to select. So imagine a farmer that he has two options before him. He can farm his land sustainably, make 100 in profit every year forever, or he can farm it intensively, make 150 in profit for 15 years, and then the land becomes desert. Which should he choose? Yeah? And we use an interest rate of 10% in this analysis. The answer is that the farmer should intensively farm, take 150 per year, and turn the land into desert as a consequence. So it's an economically driven environmental decision. Yeah? The future really doesn't matter with interest because it's all discounted into nothing. And I can't explain that, but those of you who are in finance you understand. Costs in 50 years' time are nothing if the interest rate is 10%. And the general trend is that as interest rates go up, the incentive for short-termism, the incentive to do things which have costs long in the future, but which you don't really care about, that incentive increases. And so I think part of the environmental debate today has to be related to the way we make economic decisions on project financing, and the ways that we're lending to business, the kinds of businesses that we're looking to finance. I think I'm out of time. Okay, thanks. And I said you can't be done. I'm sorry, it's a crude perhaps metaphor, but I think that we have to have a different payment system, a different monetary system, but that issuing equities, project finance based on leasing and this kind of thing is quite acceptable, so we have to sort them out.
Okay, so I just wanted to get, we can pick that up in questions. Over to the case for the defence. Brian.
Thank you very much, Mr. Chairman. Evan, if I may, can I say, ladies and gentlemen, what a very great pleasure it is to be here this evening. The whole issue of how you relate religion to economics, and especially my specialty was money, has been something that's interested me for 45 years, which is probably more than any other person in this room, other than one or two people who don't look as if they're from an Islamic background and who look more like from a background of my own. But it's a great place to be here. You raised a lot of issues there, and I hadn't planned to talk on any of them, but I'd be delighted to engage in debate on any of them, like, for example, whether money should be metallic, or in camps in Germany in the Second World War it was cigarettes, or in more primitive societies it's been shells as opposed to paper, as opposed to plastic. You raised questions of banking profitability. I must say, if you're in a bank, it doesn't look like that. It looks as if you're competing madly against other banks you have to pay interest out and you take something, but your profits are up and down. You talk about leverage and competition in business, which is a very interesting issue. And then you raise finally the whole issue of modernity and buildings and so on, and Dixon's and consumerism, which is a fascinating subject. I'd love to get into that debate as well, but we're not going to be able to do all of that tonight. But I want to give you a perspective from, as a Christian, and I want to kind of, if I may explain, something I hated to do in school. You know, when I was in school, I was very bad at mathematics. And I always have a kind of fear when the teacher said, show your workings. Do you remember that? Because my workings were not logical. And, but I'm going to show you my workings tonight as to how I come to the position I do. And I'm going to take my watch off as well, because I could easily go over time. I think there are three features of modern banking systems, and one is the payment and charging of interest, which is I want to focus on. A second is fractional reserve banking, which you really touched on. That is, I think, a technical debate. We can get into it, but it is a slightly different debate. And then there's banks as limited liability companies, as opposed to, for example, credit unions, or in the 19th century, a sort of social finance movement resulting in trustee savings banks, which we had in this country. I think there are 5 charges which are typically made against the banking system. The first is that the payment of interest is immoral. And I think you were saying there's an ethical framework in Islamic banking. The second is that interest is usury. The third, that debt is slavery. The fourth, that credit markets lack transparency. And the fifth is that the poor suffer most. We are known as Christians, Muslims, Jews, the 3 monotheistic religions, as the people of the book. I'm sure I'm not going to be able to pronounce that, but it's Ale, Kitab. Is that a fair attempt at it? I'm told pronouncing the first A is really very difficult. But the monotheistic religions have a book, and I think it's true to say that in preparing for this evening to Muslim friends, the Quran gives credit to the Hebrew Old Testament and to the Christian New Testament. The book of the Jews was the Hebrew Bible, the law, the prophets, the writings. For Christians, it's the Hebrew Bible and the New Testament. For Muslims, it would be those, but also, finally, the teaching of the revelation given to the prophet. But I think for each of us, what we would say is, in a sort of way, you know, this is almost a pre-modern debate. Because if you think of intellectual life after the French Revolution, that said, there's no such thing as God, you know, reason is everything. What we're saying is that our ethical framework is ultimately, intimately bound up with a religious worldview. And therefore the assumptions, in a way, which I'm making, this is going behind the workings, are the following. I mean, I believe in God, a creator of the world. I believe in God as transcendent and us as accountable. That, I think, is authentically Christian. I believe that men and women are created in the image of God. There's a huge literature in that, in Christian theology, that we believe in revelation, which is a very sort of unmodern thing to believe in. The prophets, the word, the written word that we have, the book, and for Christians, obviously, most of all, in Jesus Christ. And we believe that ethics cannot be independent of religion. So the methodology one would have as a Christian in trying to tackle this issue is that we take the text very seriously. And on a subject like interest, I would take the Old Testament and the Pentateuch extremely seriously. Secondly, we try and elicit from it certain principles and ask, what are those principles, which is really underlying it? Because, as you said, if we believe that God created the world, I believe, therefore, that the moral law, it's not some arbitrary set of statements, do this, do that, do the other, and so on, but actually, it's the best way to live as a human being. And what is exciting is to try and figure out, well, exactly what is it that we're talking about in terms of those principles. And then thirdly, trying to apply the principles to the problem. So if you start with the first charge, the payment of interest is immoral. The basis, the Hebrew law, I'll come on to in a minute. Aristotle, the Greeks, who said basically the money was sterile, and therefore you couldn't make money from money. The church fathers, Basil, Gregory, Ambrose, and so on, and in the various councils of the Christian church, interest charging among the clergy was absolutely banned, and then it was banned in the whole of the Christian church for something like the first 15 centuries of the Christian religion. So in that sense, there is a common, heritage that we have here. I put down here, what does the Hebrew law say, just to get into the text for a minute. I think, first of all, what the Hebrew law says is that borrowing and lending are legitimate activities. In fact, it's part of a welfare system to help people in need. And I have a quote from Deuteronomy: if there's a poor man among your brothers in any of the towns of the land the Lord your God has given you, do not be hard-hearted or tight-fisted to your poor brother. Be open-handed and freely lend him whatever he needs. Very strong statement. Payment of interest is prohibited among fellow Jews. Don't charge your brother interest. Thirdly, you may charge a foreigner interest, but not a brother Israelite. Interesting. It's not an anti-Semitic statement by me, by the way, but this is, I debate this sometimes with my Jewish friends as well. Debts must be repaid. And one of the Psalms, the wicked borrow and do not repay. And then, finally, families in Israel should not be permanently in debt. In fact, in the Sabbath year, debts were cancelled every 7 years, and then in the year of Jubilee, the original land returned to the owner, which is why we have, the Jubilee campaign, which led to the cancellation of debts and so on, comes exactly from the Pentateuch here. What, therefore, does Jewish teaching say to a Christian? I think it says 4 things. First of all, I don't see that charging interest is an offence against the moral law in the way that theft or bribery or adultery or murder is an offence against the moral law. It's not in that sense an absolute offence. Secondly, I believe the major reason for the ban on interest in the Old Testament was to protect the poor from exploitation. And this hit me once in a major way. I was travelling years ago in 1969. I was there advising the finance minister in Mexico, and travelling about 60 miles outside Mexico City, I stopped and in just a sort of road crossing, there's a little grocery store there. I went in and bought a Coke, and there were trees opposite, and there were these men on beautiful horses and wonderfully carved leather saddles and so on. And I asked the lady who was serving me, I said, who are those people? Because it was a poor area. And she said, they're the moneylenders. And suddenly it hit me that this is really what the Old Testament was about. It was about some people making money out of other people who had really got into misfortune from totally unexpected events. Somebody may have stolen their cattle, or there may have been a death and so on, and they needed to borrow just to live, and they would be exploited through this. So thirdly, the loans were primarily for consumption. And fourthly, I think it's very important also to realize that in the Old Testament, the ban on interest is part of a whole system of political economy. When the Jews went into the Promised Land, the whole laws relating to land, interest, the labour market, are really very interesting, because each family firstly was given a piece of land of the same dimensions. Secondly, after 50 years, even if you'd lost the land because you had to sell it, you could reclaim it back. That was why Jubilee was good news. Every 7th year, debts were cancelled. There was a ban on interest. And I think all of this, if you say what was the underlying principle of it, it was basically a concept of justice, of equity, of fairness.